Hey guys, Boris Schlossberg. Welcome to our weekly technicals for BK Forex for the week of 2/10/2/15. As always, past performance not indicative of future results. Trading Forex carries high level of risk, may not be suitable for all investors. High degree of leverage can work against you as well as for you. And before deciding to trade any such leverage product, you should carefully consider your investment objectives, level of experience, and risk appetite. Possibility exists that you can sustain a loss of some of your initial investment, and therefore you should not invest money that you cannot afford to lose. We should be aware of all the risks associated with trading on margin and seek advice from an independent financial advisor if you have any doubts. Information, including commentary and trade ideas provided on bkforex.com, should not be relied upon as substitute for extensive independent research. And we merely provide this information for your general information. The information and opinions presented do not take into account any particular individual investment objectives, financial situation, or needs, and all investors should obtain advice based upon their unique situation before making any investment decision. We're not responsible for any loss in current investment made by readers and clients as a result of this information. It would not render investment, legal, tax, or other professional advice, and if such advice is needed, seek advice from a competent professional. So, very, very interesting week of basically twists and turns that I think is going to create a lot of forward momentum that could be quite interesting to trade. So the first thing when you start with the euro is we peaked out at 37 last Friday, and then of course we started this week never being able to retake the 37s, which was I think a clear clue, obviously, that there was some turn in the making. But the real big trade in the euro was the break of the 34.50 level. This was a very, very important. This was a big shelf over here, as you can see. It was holding. This is where we broke out to the upside. And of course, the Draghi conference did a tremendous amount of damage, broke through the 34.50s, broke through the 34s, took us down all the way almost down to 34.50s, 33.50s. And every rally has been very anemic so far. So until and unless we recapture 34.50 and retake it to the upside, the bias remains very negative. It's basically sell the rallies bias in the euro. A break at a 50 definitely opens up the possibility of a run towards the 33, which is the next big shelf of support, which is where I think you're going to get much more meaningful bids coming into the euro as it goes. I think the shorts are going to be tempted to obviously try to see if they can run the table and push it down to the 33 level at the start of next week. But of course, if we turn and recapture 34.50, the bias completely changes to the upside. So I think it's worthwhile looking at the situation from both sides right now. The I guess intermediate term pattern that you're looking at here is basically a head and shoulders that got broken. So you could trade off of that if you're looking at it from a pattern based point of view. But to me, the levels are the most important things, and the levels at this point are obviously 33 to the downside as a downside target, and 34.50 as the upside resistance that needs to be broken in order for this to be a viable trade to the upside again. Dollar yen also really twisty and turny, and also telling us some very interesting things. So dollar yen, of course, we talked about this throughout the dailies every single day. Failure at 94, failure to recapture 94, and then of course a big swing down today in the Asian session as profit taking kicked in. However, and this is a very interesting however, the swing didn't take us down through the 92s, which is the big shelf of support over here that really needs to be broken in order for us to make this a viable turn trade. This would create almost a similar kind of a head and shoulders pattern. If you break 92s, this would be the shoulder pattern here. And it could take us 91 as a first level of support, and probably even a test all the way down to 90, flushing out a lot of the long-term longs that pretty much have bet the house that this is a one-way trade. So I think it's kind of interesting to me. Obviously, you saw me on CNBC this morning. The idea to me is to sell this through the 92s. If you can get this down to below 92, the probability of us going further down, I think, increases. That gives us a good chance to trade to the downside. For now, it's still in consolidative mode. If it comes back and recaptures 94, completely different bias. It really shows the strength of the bias at this point, that we may have one last gasp towards the run towards 95. But for now, very much the path leads resistance to the downside. We've got to take down the 92s. And if that gets taken down, I think you have a probability of them going down to 91s at least as the next level of support. Then Aussie, looking a little more wholesome. It definitely has been very, very negative. I mean, if you look at longer term, Aussie has just been sell the rallies trade ever since the beginning of the year. And ever since we failed the 106, we've just had absolutely no bottoming out. But if you go on a little bit longer basis here, and you notice that the 102.50 was a support. There is clearly a little bit of a shelf of support here at the 102.50, and there's definitely some very chunky support at the 102 level. So how far can the Aussie go? I think 102 obviously downside is the key is the key level here that the shorts are going to be targeting. But in the meantime, we've had a bounce, and the bounce back has been, not great, but at least halfway decent. 103.50 clearly the cap on the bounce back. The bigger cap is going to be the 104, 104.50. 104, 104.50 is a very chunky resistance area, and if for Aussie to recapture that, it would really have to basically be Icarus come back from the dead. It would really have to essentially completely revamp the whole negative posture towards the idea that the Australian economy is slowing down, RBA is going to start cutting rates, people are dumping Aussie as a safe haven trade. All those things are going to have to completely turn in order for this thing to really come back to 104.50. So here, I think the next level trade here is obviously the break of the 102.50s, opens up 102 as a downside, but for now we kind of channel and base after so much selling has been done in the pair. The one pair that looks relatively constructive just from a near point of view so far, pound, because the pound has been sold so hard. At first we tried to base it around 57.50, that failed. Then we finally tried to base it 56.50. That seems to be holding. But of course now we're entering very key resistance area, 58.50. The pound would have to really recapture 58.50 and trade above it in order to definitively put in a really a reverse head and shoulders and put in a very, very meaningful bottom in the pound. This could be very much a situation where if you were trading ranges, the failure at 58.50 could bring us right back down to its 57, 56.50 test. So I think this is going to be a very crucial area this week as we're watching it, and to see how we end up on a daily basis is going to tell us a lot about the possibility of where the pound could go one way or the other. The flip in the pound, the flip in the euro has definitely created, I think, what was probably the best stealth trade in the market this week, which was this. I don't think anybody expected the euro pound at the beginning of the week, which was trading 87, to end up below 85. That's a 200-point move in the euro pound that happens in a month. This happened in a matter of days, and I think that was just a shockingly interesting correction in the euro pound. Did a lot of damage, and clearly I think took out, 87 is going to be a top for a while now. And we may channel back up to 85. 85 becomes near-term resistance. 86 is, of course, a more chunkier resistance, and a possible unwind all the way down to 84. 84, however, is pretty serious support here. So this is one of the reasons why when you're looking at the euro pound and you're thinking about pound upside may be limited by the fact that the euro pound is going to have some support here at 84 in terms of moving forward. So 58.50 may be a sell in the pound if it begins to fail. A couple of other crosses that I think are interesting. Obviously, euro yen, following the yen story. And the euro yen is just sorry, let me get this over here. Euro yen is very much the story of the yen corrections, yen cross corrections. Double top at around 27.90 somewhere, failure. We are holding this 24 level more or less, but I think a breakdown here really takes us all the way down to 22, which is a much more meaningful support. 22, of course, is probably around break of the night, probably around 91.50, maybe even 91 in dollar yen, which is lines up as to how the potential next week's targets trade out. So that's sort of how things stand up. One of the things that was interesting is also the unwind of the euro, the unwind of the unwind, which was the euro-Swiss trade. The euro-Swiss, of course, put in this massive short covering rally, and now it's pretty much given quite a lot of it back. It has not given all of it back. This is why this is such an interesting trade. 22.50 is the near-term support, 2200 more interesting support, but this level over here, I think probably puts us into a value territory for the euro-Swiss, unless you believe that the European economy is going back into the garbage can. And really, I think that this goes down to 120-100 if there is a serious chance that Berlusconi wins Italy, because that will create another crisis of confidence within the eurozone. So all of the stuff could be very interesting over the next couple of weeks as we trade out. In the meantime, the near-term levels look kind of very good too for both to the upside and to the downside, and we'll be following them very carefully. Wishing you guys the best of luck and the best of trading. This is Boris Schlossberg for BK, over and out.